week, while the government pushes Coal India to sign fuel supply agreements with power producers, minority shareholders of the company have strong objections. Find out if you should be worried about your Coal India investment. Sharekhan, Hemang Jani picks Gateway, District Parks and AB Nuvo as smart investment options for you. We'll find out why. And find out what you should be doing with your banking stocks right now. Welcome to All About Stocks. Thank you for tuning in. This is a show designed for retail investors. Now, we understand you've been at work all week and you haven't had the time to track what's been going on with the stock market and with your investments. Don't worry. We've been tracking it for you. We have the latest big stories and all of the impact on your stocks. We also have a couple of stock ideas that you might find interesting that will come up later on the show. So stay with us. Now remember, if you have a question about anything to do with your equity investments, you can write to us on the email ID that's at the bottom of your screen. Now before I welcome my guest on the show this week, I want to bring in my colleague Ajay, who has the latest on the market and the final numbers. Ajay.
Well, Indian markets were the second best performing equity markets in Asia for a quarter till date basis, rallying close to 12 to 13% if we talk of Sensex and Nifty. But for the week gone by, we actually managed just about 0.5% gains. That too, the major part of rally coming in on Friday. The market was nervous about a lot of issues, especially the taxation of P-notes. But some clarifications coming in on Friday led to a blowout rally, and that's how we managed to end the week in the green. For the week gone by, the flavor among traders remained the defensive. So stocks like Ranbaxy, Cipla, and even Dr. Reddy's rallied close to 9 to 10% each. On the downside, we saw stocks like Reliance Communications, KN India falling 5 to 6%. But mostly, even the FMCG counters were actually buzzing most part of the week, clearly indicating that traders were favoring the defensives. If we talk of mid-caps, there was a decent amount of movement out there. Stocks like Dish TV, Jubilant Foods actually gaining 9 to 10% apiece. Coal India stock was also remained in focus for the week gone by. However, there was no outcome as far as the allocation and FSA is concerned. The board has still not been able to come out with a firm decision. So it was definitely a very muted kind of a week, barring the Friday rally. April definitely would be a new month, a new financial year, and also a new series. Traders are watching out for how the direction of the market may pan out, especially in the light of the surprise OMO from RBI. Also, April will have a policy meet. All these triggers will keep markets on tenterhooks. We really have to see where we actually head from here on. After a tepid performance for the week, but a good performance for a quarter.
All right, Ajay, thank you for that information. Joining us now in the studios is Hemang Jani, the Senior Vice President at Sharekhan, to help us understand all of that information and figure out what this means for our stock investment. Hemang, thank you so much for joining us. I want to start off by asking you about Coal India. We know that TCI, which is one of the largest minority shareholders of the company, has come out and said the company is not being run keeping the interest of the shareholders in mind. First of all, how much of a case do you think the company, the investor has? And as a retail investor, should I also be concerned if the company is not being run with the interest of shareholders in mind?
Yeah, it's an important point because there are so many PSU companies where the government has a larger controlling stake, and some of the decisions which are being made, they may not necessarily be in the interest of shareholders. Now, in this particular case, because TCI is a global investor, they are able to kind of put pressure on the management to ensure that all the decisions that are being taken are in the interest. But we feel that this is not the first instance. And in our country, the laws or the act is not that strong enough for you to really influence the management beyond a point. But there is not much that you can do about it. So I believe that, it's just a pressure tactic. And yes, till the clarity emerges on the extent of loss that Coal India will suffer because of their entering into FSA, it is very difficult to put out a number to it.
When we look at investing in PSUs, there's this whole concept that the government has majority stake in these companies, so they're going to be steady, they're not going anywhere. But on the other hand, most of the PSUs, including ONGC, have the whole subsidy burden. They, like you said, decisions are not always taken with the shareholders' interest in mind. So as a retail investor, is that something that I should be aware of when I invest in a PSU, like Coal India, for example?
Yeah, that's a risk that you will have to keep in mind that, sometimes the government would take decisions which would not be in the interest of the minority shareholders, and which is why some of these companies, they don't get the right kind of valuation.
If I'm a retail investor at home watching right now, I'm looking at what's happening with Coal India. Do you think it's good for the company? Do you think I should continue to hold on to this stock?
I believe, some clarity is required in terms of, what would be the impact on Coal India of their entering into long-term supply agreement. What happens when they have to import the coal, and if there are fluctuations in the price, will they be able to pass on this additional cost to the consumers, or they will have to absorb? Once we have clarity, it would be, little easy to take that call. Right now, I believe, because of this uncertainty, the stock may remain under pressure.
If you're holding Coal India right now, wait for some more clarity on all of this information. When the stock settles a little bit, we'll be in a better position to take a call on what to do with that stock as long-term investors. The other thing that I want to talk about is, of course, the gold loan companies. RBI came out with some stringent regulations on how these companies should hand out those gold loans. There's been talk about the fact that these new rules will, of course, impact the margins of the two companies as well. We're talking specifically about Muthoot Finance and Manappuram Finance. From your point of view, how much do you expect this to slow their growth down going forward?
See, we believe that because of this norm that RBI has stipulated of capping their loan to book value of 60%, I believe that they have been growing at a very rapid pace, about 35 to 40%. So the growth per se would come down to about 15 to 20%. Also, because of the fact that overall cost of funding has gone up, their margins would also squeeze over the next few quarters. So I believe that overall growth and margins both would take a hit, which is not good news for the company. So I think this sector will remain under pressure.
And of course, we know that over the week, Muthoot Finance fell about 19%, Manappuram fell 33%, which has brought their valuations down. So what's your call on these two stocks right now? First, tell me, if I'm an investor who's holding the stock, do you think it makes sense to hold on longer? And if I'm an investor who's considering the business, does it make sense to invest?
Yeah, because of the fact that these stocks have corrected, they do look attractive on valuation parameters, but I'm not very clear about what kind of growth are we going to look at. So I would really look at some other options. I would probably look at some of the PSU banking stocks which are looking more attractive, where there is not much of confusion about the growth going forward.
Alright, so PSU banking stock. Is there a stock that you could recommend to our viewers right now within that space?
Well, one could look at something like a State Bank of India, which has corrected also quite sharply and is looking pretty good at this point of time.
What if I'm holding one of the two finance stocks, either Manappuram or Muthoot? What would be your recommendation?
I would say that it makes sense to exit when there is a pullback, because we have seen a very sharp reaction in the last 2-3 weeks. So if there is any pullback in the stock,
if I see it come up over the next couple of weeks, then it makes sense to exit.
Yes.
Okay, so that's interesting information. Manappuram and Muthoot, we have seen it getting beaten down over the last 1 week. If you do see it come up over the next couple of weeks, it'd be a good time to get out. And Hemang, they're recommending SBI perhaps as a better option for you. We have time now for our portfolio segment. Now, every week we pick one lucky viewer whose entire portfolio is looked at by our guest. This week, we have Amit, who's written in. He sent us a list of the shares that he has. He tells us he doesn't have any specific time horizon. He doesn't mind holding on for the long term, which is something we love to hear. He's looking for substantial returns. He says he's new to the stock market, so he doesn't really know at what point he should be booking out. He sent us a list of the funds. I'm going to take his banking sector investments first. He has SBI, ICICI, PNB, Allahabad Bank and IDBI. He also has a couple of other stocks. But looking at his banking portfolio, he has 5 out of 8 stocks in his portfolio are banking. If he tilted too much into one sector, would you like to change something about his portfolio?
Yes, I think that in the overall portfolio, the exposure of the banking sector is on a higher side. And within the banking also, I feel that he has got too many of PSU banking stocks. Only ICICI Bank is one which is, private sector bank. So I believe that he can do a bit of a rebalancing, and he could get out of some of the PSU banking stocks and move into something like Yes Bank or Axis Bank or even an IndusInd Bank which is doing fairly well, so that there is a proper balance between the PSU banks and the private banking sector. And overall also I believe that he needs to reduce his exposure to the banking and increase the exposure to some of the other sectors.
Alright, the other stocks that he is holding is TCS, Reliance and Tata Steel. Now these are all strong stocks. Would you recommend he continues holding them?
Absolutely. I believe that most of these stocks are blue chip stocks and they are doing well. So TCS, I'm absolutely comfortable with that from a long-term perspective. Tata Steel also, though there is a bit of volatility in the stock because it's a commodity stock, but overall at this price point I find it very attractive. Reliance for some reasons has been languishing for a while, but since there's a buyback going on and the stock has corrected quite a bit, I believe that a retail investor with a long-term perspective can hold on to it. So, fine.
Alright, so we hope that helps. That's the answer to your question. Remember, you need to bring down your exposure to public sector banks, even recommending that you look at possibly Axis Bank and Yes Bank as other options. The rest of your portfolio seems on track. Please continue to hold on to it for as long as you can. Remember, you can write back to us if you need anything else. Our email ID is at the bottom of your screen. Send in your portfolio and it will be our pleasure to answer your questions on this show. We're going to take a quick break. On the other side, he might have picked two stocks that he thinks makes sense for us right now. Aditya Birla Nuvo will be talking about that on the other side of this break.